Welcome to Strategy Saturday. I'm Charles Crillo, and today I'm going to be discussing choosing target markets when investing in multifamily real estate. This is part 2 of 2. In the first part, we talked about choosing target markets, and in this part, we're going to talk about choosing neighborhoods within those target markets. Now, the importance of a neighborhood is that real estate is a super local business. So it's very important to be aware of the neighborhood you're looking at and also the surrounding neighborhoods as well. A lot of the same criteria that we're using to choose a neighborhood is similar to what we used to choose a market. Median household income is one of those. It's very important, though, before we start, what really differentiates one income level of a neighborhood from another neighborhood with a different income level. And it's usually 4 physical things, and that can be roads, highways, train tracks, and colleges. These are the reasons why wealthy neighborhoods can be so close to poor neighborhoods. So our target median household income of the neighborhood is between $40,000 to $70,000. If you're looking for neighborhoods with more appreciation, so properties that go up in value faster, versus cash flow, you're going to want to add $15,000 to $20,000. So you're going to be looking for a median household income of $60,000 to $90,000 of household income. Why is our target $40,000 to $70,000? It's because it's a mix of cash flow and appreciation. Once you start dipping below $40,000, your tenants cannot afford to live there for more than 18 to 24 months. These are high cap rate areas, but also high turnover areas. And remember, turnover is number one profit killer in multifamily real estate. The next point we're going to look at is neighborhood contract rents. That means 1-year leases. The sweet spot for us is $650 to $1,100 per month, and that gives us both a mix of cash flow and appreciation. In the Southeast, we won't go below $700. In parts of the Midwest, we will go down to $650. Anything below $700 or $650, and you're buying in a high cap rate area, high turnover neighborhood, and anything over $1,000 or $1,100 is going to typically be a low cap rate area and usually minimal cash flow. And as a side note here, do not go lower than the $650, but if the numbers work for you to go over the $1,100 per month, that might work just fine for you. But for us, $650 to $1,100 is a sweet spot for cash flow and appreciation. The next point we're looking at is neighborhoods unemployment rate. So unemployment is very important. And pre-COVID, over 50% of Americans lived paycheck to paycheck. 2/3 of them had little or no savings. And that 50% we were just talking about are the people that we're going to be renting to. So it's very important that they stay employed. The neighborhood's unemployment rate should be no more than 2 to 3% higher than the city's unemployment rate. You could go to 4%, but 3% is much safer. Neighborhoods with lower unemployment than the city's average are better areas with higher income. Those are areas that we will not be investing into. And neighborhoods that cash flow have nearly always a higher unemployment rate than the city's average. So it's important to know the neighborhood's unemployment rate. For the neighborhood's poverty rate, it's very similar to what we did when we were looking for a target market. We want to see that poverty rate under 15%, and possibly you can go up a little bit more, but make sure that it's always under 20%. Now, the next thing we're going to look at, and this is something that you can look at using any type of Google Maps or if you're driving the neighborhood, is we want to see a lot of large established national tenants near the property. Starbucks, Target, chain grocery stores, chain restaurants. These businesses have done more research than you or I will ever do. And the amount of money that they've invested into choosing areas that are going to be growth, but also that they're going to have the customers that are going to come in and spend money to make that store profitable. It's very important to be aware of these when you are choosing a neighborhood. Some of the links that you can use for finding this data will be city-data.com and departmentofnumbers.com. I will put these links into the show notes. If you have ideas for another show topic for me, make sure to go to globalinvestorspodcast.com and leave that comment. Also, please rate the show, and I'll look forward to seeing you next week on Strategy Saturday.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.